Hello traders, Gary Wagner here, just after 11:30 in Honolulu, 5:30 in New York. It is Friday. Happy Aloha Friday, as we say on the islands, 28th day of June, 2019, and this is the Daily Report for Gold and Silver, our weekend review, and what a week we have seen, with gold climbing to its highest trading point on Tuesday of this week, when on an intraday basis, gold actually traded to $1,442 and change. Now, it did back off after that. We did pull profits on our current trade. We got out at 1410. We'll talk about that trade in detail as we look at some technical studies, but we have remained flat since Tuesday or Wednesday of this week, when we got out of the trade in anticipation of this weekend's one-to-one meeting between the presidents of the United States and China, which is set to begin very, very shortly. Of course, the outcome of those talks could have an extremely profound impact on the direction of gold next week, and we discussed that in detail in our opening letter. But in terms of pricing today in the precious metals, they were, let's just say in terms of gold, quiet to say the least. Let's take a look at our price board. Traders, gold and silver were quiet, and we had a substantial move in platinum. We'll look at that in 1 second. But gold basis most active August contract is currently at $1,412.50. That is a net change of the day of up 50 cents. Very, very fractional move. Silver did a lot better, up about 0.4%, actually gaining 6 cents and closing at 1533.5 cents. Dollar index was relatively quiet, and palladium was actually down by about 0.75%, or a total of $11.70 at $1,527. But it was platinum that was really the big mover in the precious metals markets today, gaining $22.90, currently tracked at $835.50. Let's take a look at some charts. Traders, no doubt a very interesting week, a very interesting month. We're going to start today's show off by looking at a basic candlestick chart, and this candlestick chart is in weekly format. We can see that it traded to the record high this year, above 1440. It was 1442 and change before softening on Wednesday, Thursday, and in essence closing unchanged. Although the week did close positive, and we know that because we've got a green candle which says that it opened on Monday below the close on today's trading day, on Friday, we can definitely see that it didn't close anywhere near the highs achieved this week. If anything, it took a rest or a pause to consolidate as traders, including ourselves, pulled profits on our current trade. Of course, traders are awaiting any kind of news to come out from this weekend's one-on-one discussions between President Trump and the President of China as they meet in Osaka, Japan at the current G20 meeting. And traders, this being the last trading day of the month, we are now looking at a monthly candlestick chart, and we can see the incredible move with gold closing well and solidly above $1,400 per ounce, $1,412.50 currently. And we can also see that the market opened at the beginning of this month at $1,310. So in essence, we saw approximately a $100 rise in this month. This is the most monthly gain that we have seen in about 3 years in gold, and is certainly giving us some bullish sentiment for the future, and definitively some excitement as to what will occur in the weeks ahead as we go into the next trading month on Monday. And traders, the month of June was also an extremely profitable trading month for us here at the Gold Forecast. We did trade a total of 2 trades this month, and we began when the market really broke out and broke above what we considered to be a long-standing resistance line, and that resistance line was simply created by looking at the highs that were created here as well as here. Our first trade We got in roughly at 12.93 in the August contract, and that, of course, was right after the breakout occurred. As this market came up and started to soften a little bit, we did pull profits on the trade, getting out at 13.38. And so that would be approximately right here. And what you can see when we look at this area is this is the first area where we actually saw the market begin to consolidate after breaking above $1,300. And so my sense was that it was a good time to pull profits, and we did get out at 13.38. However, I saw that this market had some more strength. So a few days later, I believe it was on this candle here, June 12th, we entered another trade. This time we got in at 13.39, and we rode the market all the way up. As it came up, we continually trailed our stops up, and when we saw some weakness come into the market, we sent out a special trade alert this week and suggested that our clients exit the trade. In other words, take the stop to the market. Traders taking that call got out at roughly 14.10. That trade alone was about a 75% return, and the trade prior to that was about a 40% return. So we did quite well this month. And traders, that's obviously because, one, we are trend traders, and two, the market finally broke out of the sideways trading range and broke above that ceiling that had been so evident for about the last 3 years at 1370. Traders, that being said, the direction that we will see gold trade in next week is really going to be extremely tied to the outcome of the one-to-one meeting that's going to be held Saturday in Osaka, Japan, between the leaders of these two superpowers, the United States and China. So, based on that, my recommendation is to maintain our flat or neutral stance. Depending on the outcome, if a trade is indicated, we will initiate that trade and we will send out a special trade alert to that effect, recommending our exact next steps. We had an excellent month this month, and I am satisfied closing the month out with about 100% return for the month. This has been Gary Wagner, wishing you, as always, good trading. I am glad we were able to deliver that to you this month. Have a great weekend. We'll talk to you on Monday for the next daily update and review. Bye-bye.